Welcome back to the channel. So in this video, we're going to be doing a performance review for the month of June, just see how I did. Yeah, I'm guessing by either the title, but the thumbnail, you guys will see that I actually crushed it this month. I mean, our returns were absolutely massive. We ended up making north of $260,000 just this month. I mean, that is not normal. We're going to be diving into those trades. We're going to be taking a look at it. More importantly, we're going to be looking at the statements for my brokerage for these trades. When it comes to this channel, I want to be as transparent as feasible with you guys, okay? A lot of YouTubers out there love to show you just a couple of the trades that end up working out. They never really show you the balance of the accounts. They never show you the brokerage statements. But on this channel, I'll be showing you guys the brokerage statements. Every single month, we'll do a performance review. Whether I'm up, whether I'm down, it doesn't matter. We'll even discuss some of the trades. But let's get right into it. So as we look on the screen, this is my brokerage platform, Interactive Brokers. We'll click on account, go to activity statement. We'll push this over here. We're just loaded up. Let's go to realized summary. We'll run that. We'll select month to date. And let's view in browser, and we'll click on view. I'll just make sure there's absolutely no cuts involved in any of this process. So this is from June 3rd to June 28th. These are the tradable days of the month. I am not going to expand the account information because that's just my personal information there. Let's look at net asset value. Very first thing to look at is the starting value was 332,000. The ending value is 305. Why did that go down? Well, I did end up making a massive withdrawal on Thursday, this past Thursday. If we go over to deposits and withdrawals and we expand this, we can actually see I withdrew $270,000 out of my brokerage account. I have other uses for that money, other investments, so I did take that out, especially after having such a great month. Now, we can still calculate how much I ended up making for the month once we open up realized and unrealized performance summary, which we'll go over, and we scroll all the way to the bottom. We'll be able to see this is the P&L for the month, $260,315. If we scroll all the way up, you know, the total. This includes realized and unrealized values. Notice how for realized it's 242, but in combination it's 260. So let's begin reviewing some of these positions, right? What were the big winners in every single kind of category? Let's see. So for stocks, I've made a couple videos on this already. You know, obviously GameStop, this is GameStop in Frankfurt. They were massive winners for us in the stock category here. As you can see, 83,000 and 38,000. After them, it was NVIDIA. You know, we made $50,000 from NVIDIA, so that was also a great performer for us. That was then followed up by Tesla, Amazon, and everything else kind of falls wayside. The worst performer so far that we do currently hold in our portfolio is Chipotle. I'll briefly touch on that stock a little bit later in the video, and we do have a video on AMD. I'll throw up the image over there. Currently, the position is down 45.30. That's what it says. Now for options, we made $58,000 from options this month. Once again, a lot of them is from GameStop. A big chunk of that is from a calendar spread that is still open till this day. We did have quite a few winning trades on TLT. This is kind of a proprietary system I have. It kind of tracks a correlation between treasuries and crude oil to kind of have a forecast as how it's going to trade. So this is kind of related to those trades, and I think that was kind of the biggest option winners after GameStop. As we go a little lower here, we can see that we ended up making about $28,000 in various futures products. So this would be a couple different currencies. This is cacao, which we made on cacao. We did have a calendar spread on, but it wasn't options. It was just different months for the futures contracts. Here we have copper, which we did quite well on. Then we had micro copper, which we also did quite well on. You see these two coppers here because we ended up having to roll to another month, or I opened up a new position in the future expiration date. That's why they come in multiple times. Platinum right here, that was a good gainer for us. Let's see. So these are two sugar trades. We're still long sugar at the moment. This is currently up. So this is 0-0 because we closed this, right? So I closed this and I reopened it right here because the trade is still valid for me, but future contracts do end up expiring. So if I want to stay in the trade, I have to close the current trade and get into a further expiry. We also have, I believe this is soybean oil. Looks like there's about $36 in gains on soybean oil. Now for the currencies up here, this is Australian dollar, which we ended up getting out of for about $1,000 gain. This is the Canadian dollar here, which we did have to roll. Notice that we're currently a little bit positive. I have a video on that also. I'm going to show you guys an image of it right there if you want to find it on my channel. This is a Swiss franc that we're currently long. I did have to roll it, so this was closed for a profit. And then I'm currently in it right now from the looks of it, which I'm currently down on. So that's how those currencies look like. This is options for futures. Small little loss here. These are, so if sometimes I didn't roll the future contract in time and I end up taking it. So this would end up being under the Forex category, which you can see my gains here in total, $5,300. So all of that together is $260,000. Essentially every category here was profitable for us except for options on futures. Everything else was widely profitable for us. Again, I'm not going to ignore the fact that a lot of these gains did come from GameStop. I mean, I'll calculate this right now. So just a quick little, it's somewhere around $166,000 this month was from GameStop related buys or sells, options or shares. So 166 out of the 260, right? That's what I'll put it at. So you're talking about, about $94,000 was made outside of GameStop for this month. Again, like I've said before, this was a very profitable month. It's not going to come that often, and then GameStop was a big driver for that. So what we will do now, we'll go back to my brokerage, which is right here. We're going to look over the positions I have open right now, what my thoughts are going to be entering July. So we do have this calendar spread, which we did see the P&L of it in the statements. It's still open, still sitting here for us. I can actually just kind of show you what the chart for that looks like. Let me bring this over for you guys. So it looks like this. I should probably be looking to close it. My biggest risk would be to the upside. If price continues to go up, we do have that gamma risk where now since we're pretty close to expiration now. And again, any further drops in volatility will also continue to hurt us, and the profit tent will get lower and lower. Volatility has dropped to 98% on our long leg, and that's what we care about. We want to make sure IV stays up on that, but it can continue to drop if GameStop goes sideways. So we will likely look to get out of that calendar spread soon enough and realize those profits. Now we have AMD here, which is at an unrealized 417. I think, so what ended up happening, when I did the withdrawal, I did have to sell a bunch of my positions. I obviously couldn't hold as much as I had opened up because I was removing a chunk of money from my account. So I ended up selling a bunch of stuff from AMD, from Chipotle, from Amazon and Tesla and so on, right? So I did realize a bunch of losses on AMD. That's what it currently says it's open. Sometimes they have you realize those losses on the shares that you did sell, and then it makes it seem as though I'm kind of break even here. So this is sugar, which is is perfect trade for us, doing perfectly fine. Chipotle has been a rough one for us. What I did underestimate there was after the split, the fact that people received 30 shares for their one share. Some of them were like, well, let me get rid of 5 or 10 of these shares, right? Because if they had, let's say, 10 shares to begin with, and now they have 300 shares, like, what, let me sell 50 shares. I'm up so much on it, I originally went in Chipotle because it's supposed to be an earnings play for me. I'm quite bullish on their upcoming earnings, and I'll make a video about why soon enough. I figured getting in before the split would be a good time. Clearly, that's not the case. I will be monitoring it. Might have to just exit out for the time being, but I'll see. Then we have Tesla. Tesla, it's been a great trade so far. one of the biggest driving forces for getting into it is the fact that on social media, I would say probably a few weeks ago, no matter where you looked, people were so bearish Tesla. No matter what they did, what they said, people were just very, very bearish Tesla. And when you have situations where even the biggest bulls are doubting Tesla on Twitter, which has been the case, it might be an opportunity to actually get long on the stock, and which we did once we started seeing it break out. This call position, it's worth very little market value. I'm not even going to be covering that. Same thing for the other one. These are just stocks that I previously owned, and I sold those stocks, and I wanted to get some exposure to them, so I opened up these call options instead. And they haven't panned out, but that's perfectly fine because luckily I was able to lock in whatever gains I had on those shares in the meantime. Upstart, this is simply trying to take advantage of the fact that if interest rate sensitive stocks start going up, this would be one of the big players in that. This is also a position that I could look to exit soon enough if it doesn't materialize for us. Zeta, when I'm be covering these small positions in this video. Now, we do have GameStop back on the menu again, right? Which is funny. I mean, every time I make a GameStop video on this channel, it's, it's usually not well received. If you take my dislike counter on one of my last GameStop videos, it didn't work out too well. But I did throw it back in my portfolio. We did start seeing $26 being pressured. More importantly, as we saw with the calendar spread, if price moves up, my profits on the calendar spread will be coming down. So I figured, okay, as long as I have that calendar spread in my account, I will maybe go and long GameStop, especially as I see price kind of grinding up forward. It's not the worst idea. So that's currently on there, but I might even be out of the position. Who knows 24 hours from now? I don't even know. Amazon, this is a simple play. It obviously broke out of a multi-year resistance. So then we have the various currencies here, right? The Canadian dollar, the Russell. I actually forgot to cover the Russell when we're looking at the P&Ls because the Russell is one of my largest losers within the futures category. Since I did have to open up the position for another expiry, it currently shows us $4,000 in profit, but keep in mind we did have that loss. Overall, we're down on the Russell at the moment. This is currently the open P&L on the Swiss franc, and then the open P&L on copper, which I might look at relatively soon. A lot of these futures positions, I opened them up based on COT data. I covered that in the Canadian video, so that's why they exist. Now, overall, as we approach, as we enter July, the question is, okay, do I expect markets to go up? Now, obviously, clearly, if we're looking at my portfolio, it doesn't take a genius to realize that I'm risk on here, right? The only thing that you can argue is risk off in this whole portfolio is copper, right? One of these metals tend to follow risk on environments and risk off environments. So copper should end up being a profitable trade for me if the market starts really coming down. But I clearly need more exposure for risk off. So I am keeping my eye out for that. How can I add more short exposure? It could just be strictly from shorting maybe one of the indices, right? S&P or from NASDAQ. I'm even contemplating, if we look at NVIDIA's chart as of late, clearly, it's been underperforming, right? It's no longer in favor as much as it was, right? If you look at the Qs, the Qs hit a high on Friday before they reversed lower. This doesn't look that great, but we'll let it alone for now. NVIDIA peaked much earlier. NVIDIA peaked on the 18th. What was this? Is this the 18th? On the 20th, I mean. Let me just verify. Yep, 20th. So, yeah. So, it peaked on this date. The Qs ended up testing that. NVIDIA is so far from testing that. So, I'm keeping a very watchful eye over NVIDIA. This might be a way for me to get short. As you can see on the chart, 123. I mean, if you want to put a line in the sand to help manage the trade, getting short after a break under 123, it could be an option. But then again, we're playing with the whole fact that AI is obviously in favor, and who knows, it could be in favor for the next couple of years, and maybe NVIDIA ends up being bought out, hits 115 a share, and then people start bidding it up again. It could be simple that, hey, maybe go for a stock such as Teladoc, right? When you look at this is probably a much easier short. Some of you might look at this and be like, why would you short something that's so low? Well, It's low for a reason, right? This company is still burning money hand over fist. Right? They can't pull a profit. Their cash is dwindling, obviously, right? I mean, look at this chart. It's horrible. Of course, there's dip buyers thinking that they're going to nail the absolute 52-week low. But, this over here might be a way to play it if I want to get short exposure, Go short, I don't know, 10,000 shares of Teladoc. Normally speaking, right, I know in my own portfolio, I tend to have these periods of time where I have this windfall of profits, right, that comes every now and then that really boosts up my portfolio. And my goal is in between the periods of time when I have this windfall arrive in my account, such as what happened this month, I've got to be able to tread water and minimize my downdraw on my account. I'm currently risk on, obviously. If the markets turn around now for the next 2-3 months, they start trying to form a bottom and they retrace by 10%, my portfolio is going to drop by quite a bit, right? Because of that withdrawal out of my account's down to $305,000. Before the withdrawal, my account was at $570, somewhere around there. Obviously, there's a big difference between the two. If the markets pull back and I keep the positions the way they are, my account can easily go down to 250, 240, 230. That could very well happen unless I take some action and I end up hedging my risk-off exposure, which I will. I also want to show you, so I think before this month, for this withdrawal, the last time I made a withdrawal was last December. I think in December I made a withdrawal out of the account, right? So this is the withdrawal that I made on the 27th. You can see it right here. Wait, data range up to 90 days. Yeah, let's go check December 1st. Yeah, we could leave it like that. Let's see. Okay, 45,000. Okay, so in December I withdrew 45,000 from this account, and now I what's it called? I withdrew 270,000 out of this account as we had just seen, right? What was the date? Oops. The first and then right. So 270. Okay. Those are like my last two withdrawals out of this account. Guess what? I do trade for a living, so obviously I do live off my profits. So I do have to make withdrawals. After making a hefty withdrawal as I did today, I'm less inclined to make a withdrawal anytime soon, which is great. It gives us a chance to grow this portfolio. We do have our ending balance for the month, right? Should I bring it up again? I mean, we can go to statements once again. And again, I'm being very transparent, guys, about the status of my account, what the balances are. Let's go to realized summary again, month to date. And, this will be the figure that we will be comparing ourselves, right, at the end of July, right, 305. And again, there's no guarantee it's going to be a positive figure. If my portfolio is geared towards a risk-on environment and it becomes risk-off starting tomorrow, yeah, I'm likely not going to be profitable. At best, I'll try to hedge my downside. Maybe that my portfolio only drops by, let's say, 10%. I would consider that a win, if that's what it takes before the markets kind of pick up again. That's kind of my portfolio review and my performance review for the month of June. If you have any questions for me, leave them in the description below. Over time, I'll start talking about some of my methodologies and my approaches to trading. As you guys see how I trade futures products, I do use COT report for that and various other things involved along with that process. I have my own approach for how I trade TLT, bonds. But with time, we'll get into that. I'm trying to cover as much as I can on this channel, make it interesting for you guys. It's kind of tough because it's also, if I make a video about being long sugar, no one's really going to be watching that video. It's much easier for me to make a video about, Palantir, for example, where everybody's kind of searching and Googling for that. So that's kind of a battle, between having content that people actually are searching and want to see and hear about versus things that are more relevant and privy to my portfolio. But if you have any questions for me, just let me know in the comments below. And yeah, this will be the very first performance review, and every month we'll do another one. Thank you for watching.